So, I want to talk about a different type of investment, right? I want to talk about safe havens, right? A safe haven is just a type of investment that's expected to retain or increase in value during times of market turbulence. And, when the stock market's going down, you're like, oh, what do I do? What do I do? What do I do? And this is one of those things that's going to help you understand, like, where you might want to shift your money to, right? Investors, they're going to seek out safe havens in order to limit their exposure to losses when the market starts taking a downturn, right? However, what assets are actually deemed safe havens can vary depending on the specific nature of that down market. Now, this means in order for an investment to act as a safe haven, investors, you you need to do your research, do lots of due diligence. Okay, so let's start by trying to understand safe havens, right? So a safe haven investment diversifies an investor's portfolio and is beneficial in times of market volatility. Most times, when the market rises or falls, it's for a short period of time. However, there are times, such as during an economic recession, when the downturn of the market is prolonged. When the market is in turmoil, the market value of most investments falls sharply, steeply, right? Sometimes unexpectedly, just gone. But while such systematic events in the market are unavoidable, some investors look to buy safe haven assets that are uncorrelated or negatively correlated to the general market during times of distress. While most assets are falling in value, safe havens either retain or increase in value. So let's talk about some of these examples. Let's go over a few of these. And the first one we're going to talk about, that's a lot of people's favorite, gold. For years, gold has been considered a store of value. And as a physical commodity, it cannot be printed like money, and its value is not impacted by interest rate decisions made by a government. Because gold has historically maintained its value over time, it serves as a form of insurance against adverse economic events. When an adverse event occurs that lingers for a while, investors tend to pile their funds into gold, which drives up its price due to increased demand. Also, when there's a threat of inflation, the value of gold increases since it is priced in US dollars. Now, other commodities like silver, copper, sugar, corn, livestock, these are negatively correlated with stocks and bonds and can also serve as safe havens for investors. So, the next one that I want to talk about are Treasury bills. You might hear a lot of people say T bills, right? Treasury bills, T bills, interchangeable. Now, these debt securities are backed by the full faith and credit of the U.S. government and are considered safe havens even in not very good economic climates. T bills are considered to be risk free as any principal invested is repaid by the government when the bill matures. Investors, because of this, tend to run to these securities during times of perceived economic chaos. Now, the next one to talk about, I've made a video on this recently, so we're not going to talk a lot about it, but it's going to be defensive stocks. So, let's just talk about some examples of defensive stocks. These are going to include utilities, healthcare, biotechnology, and consumer goods companies, right? Things that you buy every week, constantly, shampoo, you need to eat, you need to wash your clothes, stuff like that. And regardless of the state of the market, consumers are still going to purchase, all these things, your health products, basic home supplies. And like I said, you got to eat. Therefore, companies operating in the defense sector will typically retain their values during, times of uncertainty as investors increase their demand for, shares in those companies. Now, the next one is just straight up cash. Arguably, cash is considered the only true safe haven during periods of market turndown, but cash offers no real return or yield and is negatively impacted by inflation. So it's like it is and it isn't. I'll leave that one up to you. So the next thing, that kind of plays into cash order is currencies, different currencies, because some currencies are considered safe havens compared to others. In volatile markets, investors and currency traders may seek to convert holdings of cash into these currencies for protection. One is going to be the Swiss franc because it's considered a safe haven currency. Given the stability of the Swiss government and its financial system, the Swiss franc usually faces a strong upward pressure stemming from increased foreign demand. Switzerland has a large, safe, and stable banking industry, a low volatility, capital market, virtually no unemployment, a high standard of living, and positive trade balance figures. Switzerland's independence from the European Union also makes it somewhat immune to any negative political and economic events that occur in that region. You know, Also, because of this, like Switzerland is also a tax haven for the wealthy who take advantage of the country's high security and anonymous banking features to evade taxes and hide ill-gotten funds, right? You've seen this in movies and TV shows, and you think, oh, that's just in the movies, and it's not. In addition to the Swiss franc, and depending on the particular challenge that the market is facing, the Japanese yen and the US dollar are also considered safe haven assets, offering the US dollar as a default safe haven for companies facing any domestic currency uncertainty due to the fact that it's the world's reserve currency and the denomination for many international business deals. Every year, Morgan Stanley picks the year's best safe haven currencies. In 2020, the investment bank picked the US dollar as the best safe haven currency. It also named the Japanese yen and the Swiss franc as relatively safe bets. In a research note, Morgan Stanley, one of the analysts wrote, "We expect the U.S. dollar to be the best safe haven currency, especially now that the lower U.S. rates make it more attractive funding currency for carry trades." Now, this, as a little note, was because during 2020 and part of 2021, interest rates were just incredibly low, and they were trying to get people to borrow money to spend money. The pandemic had just hit, and there's a lot of stuff going on. You know, let's take a little side note actually, because I want to talk about some special considerations. So some of the things that we listed, above that we've gone over, these aren't guaranteed to maintain their value during periods of market volatility, right? What's more is, what constitutes a safe haven is going to change over time. As an example, if an entire economic sector is performing poorly, but one company within that sector is performing well, that stock could be considered a safe haven. Investors should carry out, your research, your due diligence when looking to invest in safe havens, because an asset that's considered a safe haven in a downturn may not necessarily be a good investment when the stock markets are rising. Okay, so what do we take away from all this? What are our takeaways? What's our lesson learned here? Okay, safe haven instruments are offer they're gonna offer protection from when the market goes down. Precious metals, currencies, and stocks, from particular sectors have been identified as safe havens in the past. Safe havens in one period of market volatility may react differently in another. So there's no consistent safe haven other than portfolio diversity, right? This is why you hear a lot of people tell you to buy, a broad market index fund, right? It just takes care of all that for you. Hopefully, you guys got some good information out of this, a good understanding of what's going on with safe havens and how you can use them to your advantage. If you did like the video, go ahead and smash that like button. And, if you're not subscribed to the channel, I'd really appreciate it. But until I see you guys in the next video, y'all be safe.